The opinions expressed in this podcast do not necessarily reflect the opinion of Arcos Global Advisors or its advisors. The mention of different asset types or securities do not constitute a recommendation for our clients. If you have any questions about the content of this podcast, please contact your advisor. All right, thanks everybody for joining today. I have with me Matthew Mežinskis with Porkopolis Economics. And Matthew, I've seen on Twitter, does some weekly or monthly videos. They're very interesting Bitcoin and global liquidity topics. So, Matthew, thanks for coming on, and look forward to chatting with you about a number of these things today.
Anytime, Kane. Nice to meet you, and thanks for reaching out. And yeah, always happy to discuss this stuff and geek out with people that are interested in tearing into the numbers for, some of this Bitcoin stuff and macro stuff.
Yeah, now is definitely the time for both. It seems like every day there's somebody with a new Bitcoin metric or liquidity flow. So that was what drew me to some of your work. And it looks pretty in depth. We talked about it a little bit before, but a system you've kind of put together yourself. The charts look like they flow seamlessly, and you're kind of culling through all the data, getting that in there so you can look at it however you see fit, which is pretty interesting on my end. So a couple of things that we'll talk about today, or primary things, is just the power law of Bitcoin. Maybe you can explain a little bit of that, break it down, and then secondarily, global liquidity. So Michael Howell does a lot of that on some of your videos. You've talked about taking all the fiat dollar amounts and the global capital and looking at things through that picture. So from my end, one thing, and we didn't really discuss this, but I'm starting to think, does Bitcoin solve what SDRs had attempted to solve in the 60s and 70s?
Mm,
But it can actually be a true digital money, a true digital liquidity feature, as it's pretty clear that more and more liquidity comes into the system, it has to have somewhere to go. So I guess let's start with power law. Maybe you can just simply break down, you don't have to go deep into the math of it, but how it works. And one thing you've said is time is beautiful, or something to that effect. Why that's so important
yeah,
for the power law.
sure. So I guess I was the second person to observe that Bitcoin's characteristics, whether it's on price or addresses or hash rate, is following this trend line that resembles a power curve. One thing I tend to say power curve. I've always said that. Law tends to trigger people. So when they hear law, they think like, oh, it has to be this, and you're just esoteric, and it can't be that. Bitcoin is, hyper Bitcoinization's around the corner, and there's a lot of quibbles about this online, but I'm not really interested in that. I come from a finance background where I've helped people in various companies, primarily real estate finance, but there was also some other businesses through the years that I was consulting on. And basically that came down to working in Microsoft Excel and making projections. And most projections that we make are actually either linear or exponential, right?
Mm-hmm.
Those are pretty basic to people, right? Linear is just a straight line on linear scale. Exponential is a straight line on log scale, log log scale on the y-axis. So uh, just to be brief here, most of the time when we're talking about trends in the world, in the financial world, or even in just sort of the natural world, like population growth of the world, we're speaking in terms of exponential. So, population growth worldwide, or GDP growth worldwide, or in a certain country, um, stock market growth, right? For a global stock market index, or bond market growth, or also when we talk about making returns as investors, investors have a different hurdle rate depending on which market they're in. So maybe they want 5% return, 10%, 15%. If you're a manager of some of these projects, you'd like to take a fee over a certain hurdle rate and all the rest. And it's just a bunch of playing with numbers. But at the end of the day, most of the TradFi world is exponential. And so the simple way to talk about that is the old rule of 72, right?
Hmm.
It specifically has to do with time, right? So if it's 10% works perfectly for the old rule of 72. So a 10% return on an asset will not double in if it's compounding, which is exponential. It won't double in 10 years. It will actually double in 7.2. And the way you find that is just take 72 divided by the 10, drop the percentage sign, you get 7.2. So it's a quick and dirty way to find the return of an asset. And so a 10% return compounded will double in 7.2 years, whatever. So, the whole financial world is based on that. Your IRRs, your yield to maturities, everything. But with Bitcoin, it was interesting when I was looking at it. Uh, and I can't say that I was doing anything more fancy than plotting things in Microsoft Excel and clicking the different trend lines. Okay. So I'm not saying I'm doing anything scientific, but
I mean, there is some value in this kind of digitally integrated world, APIs and everything, all fancy. But when it comes down to it, somebody's putting something in Excel somewhere. It's
that's right. That's right. Excel or
it's
Google Sheets is
it's a powerful tool. It doesn't matter, it's like DOS. It just is there.
yep, totally. It's my world, so I enjoy it. And there's comfort, right? There's comfort in the numbers. You kind of
Hmm.
can start to ground your reality around it. Um, so Bitcoin, when you started to graph this stuff long enough, and this was around 2018 when I was doing it, you start to see that it's the power curve that fits it better. And so I don't say power law. It is, I guess, scientifically, some people call it the power law, some people call it power series. But anyway, it's just a different type of regression. It's a different type of trend line. And the difference between, say, exponential, they're both nonlinear, right? So they explode kind of basically.
Hmm.
But the the keywords for a an exponential curve is that it's constant, right? So we just talked about it. Like this is why fund managers, it makes sense. Like, okay, I just want 10% return. I want 50% return.
Right.
You know, you know what you're going for, and it's going to be the same, and the doubling time is the same if you roughly hit that return for your investment. But the power curve is proportional. So the keyword there is proportional. And we can look at them. We can look at some of them here in a second. But basically, if you do it over time, which in Bitcoin, uh, it works in many ways, but the most basic power curve that everybody goes to now online is the price over time. So when I say, the look at an axis, right? The y-axis is price, what you're trying to predict based on past results. The x-axis is time, but the x-axis is not a date. You can overlay
Right.
dates on it, but it's days. So it becomes just a typical scientific regression. Days since the Genesis block. One actually. Some people can do zero, but you actually it's supposed to be one on the Genesis block. So it's day one,
Yeah, when
and then
you
you
run
can
zero, the math gets a little wonky.
yeah, you have to have a iterator. Yeah, very good, very good. You have to start because a lot of people in cryptography world they start things at zero, and in finance, by the way, time
Right.
zero,
Hmm.
but it needs to be one. So the January 3rd, 2009 is day one, uh, and then we actually literally just this past weekend, we're recording on Monday, the 9th of June. So I think it was the 7th. Bitcoin hit 6,000 days.
Yep.
So it's kind of interesting. So
What
using that
and right now,
example,
why is that? Sorry to break up. Why is that part interesting?
so just because it's a round number.
Round
That's
number.
that's the
Okay.
only reason.
Okay.
Yeah.
Yeah, like
But
10,000, 100,000.
right. But you got to do some math to get into it, but we can we can finish this portion of the show right now. So basically what it comes down to, the Bitcoin power growth, like we're thinking of, stock markets grow at say 10% per year, whatever. They are roughly doing that over, 50 years if you
Yeah.
invest your dividends.
Yep.
What happens with Bitcoin though is you need to look at those days of the network being in existence, and then the number that you find, don't worry about how you find it, but the number is about 12.7%. So if you take, and I'm literally don't know exactly because it's going to be 670 or something, but take 6,000 times point 12,
12.7. Yep.
yeah, 0.127, it's going to be 762 days. So what that's saying is, and the power trend today is right around 100,000. Okay.
Hmm.
And then what we find, at least the curve that the Bitcoin price seems to fall on is that for that trend line, which is right now 100,000, which happens to be the actual price, roughly, although we're pumping right as we speak. For that to double, you need to increase the length, you need to dilate the network basically by 12.7%. Okay, so that means add on another 762 days. That's how long it will take for the curve or the trend line
To
to
get
double.
to 200-ish.
To get to 200 is
Yep.
1,000 on the trend
Yep.
line. So that is that is what a power relationship tells you. And the keyword there is it's not constant, obviously, because
Right.
you can imagine 12.7% of the Bitcoin network when it was only 600 days old or
Hmm.
60 days old is a very quick number. It happens very,
Yeah.
very quickly. But as we get drawn out, time sort of extends, and we get the network gets older and heavier. Um, this this number also gets bigger of the time to double. But
Hmm.
so the key word there to describe the relationship of the Bitcoin network with price and time is not constant, but proportional. So that's what a
So,
power curve is. It's proportional.
and I think that, and then we'll talk about this a little bit more, but just kind of bring forward some of the stuff we may talk about later is that it's systemic, right? So,
Yeah.
in early days of a system, it's fragile. There's few users. It's volatile. So
Yeah.
you'll talk about it later, but the dollars per day was lower, but the
Mm-hmm.
returns were much higher. And now the dollars per day are much higher, but the returns are much lower, which it makes sense if you think about it just
Right.
from a cell phone network adoption or internet adoption. We're still so early that of the 8 billion people in the world, not many of them, relatively speaking, have Bitcoin or any kind of cryptocurrency. But if you step out 10 years and that number doubles, triples, quadruples, then the network is not going to be all over the place because more capital and volume comes in. You have more liquidity going in and out, which lowers that volatility, which gives you that curve flattening. And
Exactly.
and to me, it's really easy to see when you look at it that that spike portion seems to be not over, but not. We shouldn't expect 600%, 1,000%, 2,000% in very short windows. It would take longer, which is, as you've talked about, and it's on your site, that 13% spread starts
Yeah.
to get longer and longer as the base numbers get bigger and bigger. I don't know if that made sense, but
Yeah. No, to me, it made perfect sense. And just one more thing, side comment. And I'm not I haven't studied this stuff my whole life. This was, for me, it was just an interesting find, like 7 years ago. I've made a bunch of charts since then. But you mentioned cell phones, and then
hmm.
people often think about this thing called the S curve of technological adoption. And so they
Yep.
kind of think that Bitcoin might get on that. So where we were taking off uh, kind of slowly at first, and then we kind of go exponential and then
Hmm.
level off. I actually don't think that specifically with cell phones will happen with Bitcoin because, again, the theory, a lot of people have different ideas on the theory, but you can find people that have charted these things out for a lot of appliances and tech, right? Like
Hmm. Hmm.
dishwashers, cell
Well,
phones,
there's that
telephones.
whole the one chart that has like
Yep,
cement, steel, internet. Yep.
precisely. Yeah. Um, I can't even remember if internet is on there. I need to check it. But the point with the S curve is it seems to be a more of a business type thing. It seems to be
Yes.
more like when you need actual businesses to make actual things, and you know, uh, there's a supply chain phenomenon and all the rest. With the power curve, it is precisely what you said about the how back in the day we would have a more days with higher returns over quicker amount of time,
Yep.
right? Versus now, it's going to take longer to have higher returns. Or another way to say that in network speak as well, with like who's really involved in the network. It's adjacent topic, but they talk about this a lot. If you imagine this distribution, like in networks, right? You have a network that has few. Just the description of a network, any network, is basically
Hmm.
it has uh, there are few nodes from a few big players, so a few large nodes that
Yep.
have many, many, many transactions. And then on the flip side of that, there are many, many small nodes that have few transactions. So it's the
Right.
exact same thing as you said regarding the daily returns and the size of the returns in the early days. So it's basically this distribution, once you flatten it out and you look at it on a curve, um, it just sort of has that tail. And that's a different type of curve than the S curve. And if
Right.
you plot it on log log, it becomes a straight line, which also is another reason how you know it's a power curve. And Bitcoin, interesting, it seems to work in like many ways. Like you can plot addresses versus hash rate versus price, price versus time. You will get this power curve relationship. And
MSTR versus Bitcoin.
yeah, yeah. Uh, is it doing power actually? I'm not
Yeah,
even sure.
yeah,
Yeah,
Giovanni and Steven when they go over their stuff.
yeah,
It's not the same power, but it is a power, and I don't know it intently, so
yeah,
um, but yeah.
yeah. So it's just the reason I wanted to say the aside with that is I think people mix exponential and power a lot. They And it is true. Like on a short run, when Bitcoin is flying up to 20,000 or whatever from the first, beginning of the year was 1,000, that growth does look kind of exponential in the short run
Yeah.
or
It is in that because the
in that
thing
period.
that creates that massive spike that is unsustainable is exponential.
Yeah.
But the
Right.
stability feature is the power curve that once that dissipates and comes back, it doesn't collapse and go to zero, which is traditionally what we see in traditional assets like stocks or tulip bubbles and things like that.
Yeah.
Because there's
Precisely.
no, that was one thing you said a minute ago, which was not kind of what we were talking about, but it was a great insight that you brought up. S curve is more business. And so if you think about power curve is more systemic.
Yeah.
And if you read Jeffrey West's scale book, I don't know if you've read that. If you haven't, it's
I
very good.
have. I was actually going to mention it. Yep.
Talks about it's kind of like the golden rule, which is Fibonacci and the way that trees grow, the way that waves crash, the way that humans grow, the way that all these natural networks, the way ecosystems work and feed off of
Mm-hmm.
each other. The power curve seems to show that same relationship, completely different math. But in Bitcoin, which is a monetary systemic network, not a business cycle. So when you said that, that was where my head went, is why there could be some difference. Now, I don't know. I just made that up on the fly. Um,
No,
but my thing with Bitcoin has always been trading is not a profitable business. It is a
mm,
profitable business for an exchange, for a few people, but from a thing that makes the world a better place, trading generally makes it a worse place because you get degenerates, you get scams, you get rug pulls, you get capital siloed. But business, systemic businesses that evolve over time are what evolve kind of markets and the evolution of people and cities and states and the world. And so I don't know, piecing those two together really makes sense. Just kind of as you
yeah,
brought
no,
it up.
precisely. And trading, to take that point further, traders do have a useful function in finding price, but
Hmm.
it's no question that markets tend to swing in a pendulum, right? And traders
Right.
can go really hard one way and everybody gets really excited and then we get the FOMO and blow off. And that does seem to be exponential behavior. And then it can go the other way. And then you need to
Yeah.
wait 20 years for the price to recover in the example of the gold market. So, um, yeah, if someone's still wondering how I pieced all this together, like with Bitcoin versus other markets, I think you did a very good job explaining. But I would also say it's just it's interesting that we see it. I'm not actually sure why, other than networks seem to grow this way. Like you said, there's some other organic things, and you can look at like the caloric intake of a human baby's head size
Right.
versus the adult head size. You get this interesting distribution. It doesn't even have to be a human; it can be other mammals. But it's there's all sorts of and what, like you said, West's book is a very good one to talk about. So also the growth of cities.
Yeah.
So population growth worldwide is exponential, but if you look at like a city, they don't just kind of go exploding into the sun exponentially. They go usually with a power
Hmm.
relationship where, you can have people sitting on top of one another. You can have not everybody drives a car. People take public transport. There's just the relationship of the population growing in a city is different than the system as a whole. Now, again, that can again be kind of confusing because Bitcoin, we're saying that the system as a whole grows in power, but there you go. It's just an
What?
observation. And then at the very, very beginning, there was a guy on Bitcoin Talk, not very beginning, but 2013, 2014. His name was Low. And he was modeling this as I've been doing it on logarithmic, which is even
Mhm.
faster than a power at the beginning. We don't have to go into more than that, but it super explodes at the beginning and then levels off. And Bitcoin seemed to be looking like that. But again, I think I was just lucky on the timing. I started to try to recreate his stuff in 2018, and the power curve was really solidifying probably from about 2016 in Bitcoin. And then
Yeah.
Giovanni was the other guy that he posted it before me a couple months on Reddit. So he was,
Hmm.
as I said, he was about the first one to do it. But yeah, so that's become kind of a core component basically of my research is just drawing the trend lines, trying to understand the trend lines, doing different ratios. Um, and then in conjunction with that, not to go off topic, but hopefully this might be your next question is in conjunction with that is in 2018 as well. I actually did another piece of research which was trying to survey all the central bank money in the world and just doing it, not like without judgment, just doing it, seeing how it actually looked, seeing how it grew.
Hmm.
And it's funny. I mean, like the IMF has a schedule of this, but it's very incomplete. And it's not even they have more currencies than me, but also they have like, it's weird. They don't,
It,
it's
it's
just not
crazy how
complete.
important money is and liquidity is to just our economic well-being. So basically everything we do. But
Yeah.
when you go to these big sources and ask for pinpointed data or try to get it, nobody has it.
Yeah. Yeah. So I don't know. I mean, I don't know if anybody else has done it since then, but I've just about to release my first quarter, which is like a bit delayed now that we're almost done with the second quarter. But I mean, some of these
Welcome
banks,
to
like
the
they've
world of finance.
yeah, some of these banks have literally just posted their third quarter. It's so funny. So it usually takes me at least a month and a half to do it. But anyway, point is, uh, the top 50 currencies in the world. I've been compiling that as well since 2018. So I'd say in the
So,
last couple of years, I've been trying to merge these two ideas and see if we can get if we can find, a solution here. Is basically we have the TradFi world, central bank money world, and then we have the Bitcoin world, which seems to be a network evolving in a power relationship. Where do those two cross? It's kind of the big question, right?
well, that was, and kind of adding on to that, sort of, I think the moment Bitcoin clicked for me was when I went down, decided to go down the rabbit hole and just figure out how it worked fundamentally, just from
Mm,
a beginning, how does a network work? How do transactions work? How does mining work? How does mempools, all that stuff work? Which is not just what's Bitcoin price trading at today. And I had started college in computer science back in 2000, finished in finance. So I always kept that computer science piece as technology was coming about, but it was not anything cool. You were kind of red stapler guy in the basement. So I just
mm,
said, "Hey, I can't do that for a career." Um, but I had read a bunch of network security books, played around war games, looked at different network architectures to, have an understanding of how TCP/IP and the information worked and the information traveled around the internet. And so as I got into Bitcoin and looked at some of the scaling and network structure and the architecture, it all was 100% the same. And so there was just a
mm,
path that you say, okay, well, if liquidity now flows on these things the way that information flowed on those things, there's this path. And if you say gold was an economic network and kind of relating some of scale and the volume that gold needed to support became too large, so it broke. So I had to create dollars and treasuries, and each one of those became their own network. So a second and third layer on top of that base layer. The volume of price information that was passing along those broke. So we had to create another layer, which is petrodollars. And eventually because those became exponential with no real innovations, they hit that finite time singularity, which killed them. And so we
Mm,
each layer. And so we finally got to a point where the base layer of the internet, which was carrying our information, broke because we had too much volume of too much content, too much information. You basically had cell, well, I'll call it reading data like text. And then you had e-commerce. Once we got to content, memes, and the volume and the capability where you and I each could create thousands of pieces of information a day and video on top of that, it broke that structure. So for the world to continue to evolve, we needed another innovation layer on top of that TCP/IP, which is Bitcoin. What's unique about that? It carries both price and data. And as you're seeing, you need other scaling layers on top of that. Some of that, I'm not a big crypto guy, but some of that will be crypto protocols that will tie in, just like we got email and voice and e-commerce and credit cards on the old traditional system. So I think those will be technologies that help move information and velocity of money around, but the core base layer will be Bitcoin. So for me,
yep.
that was how it all kind of clicked, was just seeing node network diagrams and say, I've already seen this before. That looks like a DMZ. That's a major node. The point that you made about you've got your bigger nodes and smaller nodes. Well, it's no different than ISPs, which is where we all connect in to get our internet. Now, outside of that, we could have our own LANs and just create our external clouds, which is effectively what you started to see in the mid 2000s for security reasons. Companies would create not an intra network, but their own private clouds
Right.
that were built on top of these LTE systems, which were the cell phone networks, which piggybacked on top of their core, traditional TCP/IP network. So,
And how are you mapping AI onto this?
I haven't started to yet, but my core belief as to why we got to AI, it's the same thing. The internet search reached its finite time singularity, so it's death because of SEO. So
Mm,
because we gamed the system to the point where it just broke it. So when
mm,
you or I wanted to know, like, tell me about Bitcoin power law, we end up on some cake baking site
right.
because they looked at the keywords and Bitcoin power
Right.
law were the top ones. And, or you got this article. Yeah. So we're not even getting the right information. So, the incentives drive what people will do because the incentive is money. And so they don't really care what the site is. They care about clicks and getting ads and, directing people to their YouTube. So AI solved that problem because when you type a question into AI, you don't get some ad or some cake baking site. You get explicitly what is the Bitcoin power law? How does it work? So I think where AI helps us, I think we humans have the best AI in the world. It's our brain, but we don't know how to fully use that. And so we don't recognize when our brain recognizes things. So what we do recognize, but we can't figure out, we type into AI and then our brain can synthesize the answers. So I think it's a dual layered AI where we actually, if used correctly, if used creatively, if used productively, it'll be a major benefit. If you just go and type in what is Bitcoin and AI gives you the answer and you just repeat that answer and you don't really think about it, I think it will be a negative piece for people. But
And it's expensive too. It's
yeah,
like 100 to 1 right now, right?
yeah.
At least as far as computational
So,
requirements.
so in a roundabout way, you could say that AI is that mesh version of a network. So it's meshing our brain with all the data that exists in the world and kind of how we use that would create that meshing of information and need. I don't know.
Yeah,
That's
no, I'm curious. I've thought about it. I haven't modeled it or thought about modeling it, but this is obviously coming in conjunction, like pretty much on the tail of Bitcoin.
yeah.
And Bitcoin is only 10 years slower than, the web, 13 years
Hmm.
slower, right? Or whatever, 14 years. But obviously this stuff's been going on even longer, like since the 70s. But yeah, it's going to be interesting to see how the AI maps onto this in conjunction with Bitcoin, because to me, it's just understanding the growth trajectories, right? And
Yeah.
that's really, at least for my little corner of the internet, what I'm trying to focus on. And it seems like AI is going to be a pretty huge boon. But like you said, uh, it's it could be used very poorly.
That's the danger. I mean, we definitely get to the machine to machine payments, and if a wall decided to be a business, it can now talk to a wallet, which could make
Right.
transactions. You could buy a fleet of Teslas or whatever when they become self-driving fully, and that be your job, and there'd be no driver, and people pay the car. The car knows when it's maintenance, and it goes to the shop and fixes itself. Um, I'm not sure that that's a healthy environment for humans because we were built to do work. And if we don't do work, then we just become lazy and unproductive. We weren't really built to sit on the beaches, even though because of broken money, that's what people are trying to do. Just
Yeah.
get to the FU number so they can go sit on the beach, which is kind of, we should be doing stuff more like what you're doing, passionate projects that lead to positive outcomes.
Yeah. You're fast tracking the way to the Wally world, like that old Apple movie where
Yeah.
they're in the spaceship just drinking their food.
So in short, AI in the wrong hands in conjunction with Bitcoin and other monetary access, it could be uber totalitarian.
Mm,
Um,
yeah.
in the right hands, it could be super productive. So, sorry, I got off track there, but
No, I'm right with you. I think this is it's all going to intersect at some point.
yeah,
There's also the old Ray Kurzweil singularity idea, right? I think his plan there was,
I
and
don't
he
know
was
that one.
yeah, so he was an exponential guy. I mean, he's still around. He was
Hmm.
with Google for a little bit, but his whole thing is he's trying to bring his father back to life, which in some way, if you think about what AI can do, I mean, we're getting even
Hmm.
closer. Even if it's just talking like on a computer,
Yeah.
that's still something. But he was a big exponential guy, always on exponential. I don't really know what it says yet that Bitcoin is on power, but so far Bitcoin is on this power trend, and it's faster than exponential at the moment, but it will,
You can see it
it
flattening.
yeah, it will flatten.
Hmm.
And that's the weird thing too, because if like we can look at some charts if you want, but
Yeah.
Bitcoin, I'm looking at Bitcoin maybe passing the traditional monetary system in less than 20 years. It's like something
Hmm.
like 2043. But if one visualizes that, there's an arc to this on an on log
Hmm.
scale with the power curve to Bitcoin, but the traditional financial monetary system is compounding, so it just chugs along at a straight line. At some point, that arc is going to go back under again,
Right. Right. Well,
and
why don't
it
we pull
becomes
it up?
philosophical. Yeah, yeah.
Yeah. Um,
I can actually show that chart just to start it because I do have it.
yeah.
If we look at a traditional market like gold, all right,
Hmm.
so got a gold price here. Um, I'm actually going to put this on log scale, take away a bunch of this stuff. So you draw a trend line through gold. And, as everybody knows, who's in Bitcoin or the gold markets, was depegged, right? In 1971, January 1980 hit $850 for like a second, 2 seconds, and fell into 20-year bear. Peter Schiff was glorifying gold when it was almost $2,000 an ounce in 2011, then went sideways until now. And now it is going up again. But anyway, you can draw a trend line through that exponential. So you see here it's log scale. It's a straight line. We do the growth of the trend, compound growth rate. I'm going to put it as a black straight line now, as in horizontal. You see it's
Hmm.
5.1%. So that is the slope of this trend line, 5%, 5.1% per year. And then you can do doubling time from that. We talked about it's 14 years. So every gold, you can have massive swings here. You can be well under trend, right when Gordon Brown was selling the UK's gold. Perfect timing. Way under trend when he should have been buying massively. He sold it. But roughly, if we were to smooth this out, try to take a scientific view, the price of gold grows at 5.1% per year. Now, take another look here. This is the available ounces of gold. I take a few different sources for this, World Gold Council, CPM Group, but so let me pull this up. Same thing, you put it on log scale, it's a straight line. It's nearly 100% R squared, so it's like an amazing fit. There's about 6 billion, 5.9 billion ounces of gold mined throughout humanity. This doesn't include the 14% or so that's used in industrial. So anyway, 6 billion would be the trend, 5.9 billion is the actual. You look at the slope of this trend, and it's 1.8% per year. A lot of people have heard that number, right? Gold comes out of the ground
Yep,
at
2%.
1.8% per year. Yeah,
Yep.
2%. Yeah.
I mean, yeah, just rounding. Yeah.
Yeah, my findings on like a 50-year line is 1.8. It probably was even slower than this like a couple hundred years ago, but it's about what it is now.
Yeah, it
So
takes a
anyway,
lot longer to get it panning than it does with the big, you know, arm that's
right,
just chewing through
right,
dirt.
precisely, precisely. So so it's interesting. You can actually put these two numbers together. We got the 5.1% here and the 1.8% here, and then multiply these together, we get a gold sort of market cap or available cap, right? So just take the ounces, multiply by the price. And the compound growth, as you see here, is 7. So you can add them together by multiplying the two. So it's just a quick and dirty example just to show, yeah, gold is screaming now, but if you look at it over the long term, it's, yeah, it's
So,
over trend, but it grows at 7% per year. That's like kind of like the gold network
yeah.
doubles every 10 years.
So two things that are real that come to mind when you show that. One, Sailors talked about it, the inflation rate is the average annual rate of stocks over whatever, and he used kind of that 7 to 9, even though over a much longer period, because we've had a lot of growth, it's closer to like 10 or 11 now. Usually it's a little bit lower. This is probably a better
Yep.
fit for true inflation, right? Because gold is the base money of all economic systems. It's the only asset to last throughout man's
6,000 years.
yeah,
6,000 years. Yep.
yeah,
It's the
as money.
Venetian times.
Yeah, and Bitcoin's doing well, but Bitcoin's only 16 years in, so it has a lot of proof case. And I think we believe that on a go forward, Bitcoin will eat into a lot of those other assets. But you probably still, to have enough economic prosperity go around, you'll need multiple base money assets, which is sort of Nick Bhatia's layered money thesis and book, which is pretty good. But so first off, that's true inflation. So that's what you need to beat annually, 7%, to not have erosion of purchasing power, whether it be income, profit, however you do it, investments. And then secondly, you know, the Bitcoin community is probably other than gold bugs, and there's a lot of similarities between those two. If you kind of look back over the last 30 or 40 years, think that you should only be 100% long Bitcoin. But if you look at the Kelly criteria, that pretty much guarantees a zero at some point. There are different times when the weightings of the different asset classes will help or hurt you more or less. But
Yep.
anytime you step over 50%, you're increasing the likelihood of a zero. And then it's mathematically essentially guaranteed at some point. But the dip below that trend line. So if you think about asset allocation, when are better times and worse times to allocate? You're better being much closer to 50% allocated to that asset, or if you had 3 or 4 assets you're looking at deeply below that trend line, which is when it's mostly out of favor. And that's kind of when great investors make their best decisions. And then as you get above at some level those trend lines, that's when you want to be pairing out, which is laddering out of an asset into momentum. So if you use a term that gets thrown around today in crypto, that into that above the trend line, nice growth that nobody wants to sell, that's your exit liquidity.
Yep,
Um,
precisely.
and
And
I,
yeah, just one point on that is the Kelly criteria is, I think, a great way to look at that. Uh, the the gold market here is obviously, it kind of provides, again, just some stability. People understand gold. They understand that it's a safe haven asset, even if Warren Buffett didn't like it and thought, we just dug it up to put it in the ground again.
right.
But still, it
It's
it
collateral
has,
asset.
yeah, it is. And
Yep.
it's not as repetitive or predictable so far as Bitcoin.
Correct.
But the overarching point here is just that, yeah, gold grows at 7%. And what we can talk about in a second, Bitcoin grows at a different rate. And this is not a straight line on log scale. So you just got to start to think about these different things when you put that Kelly criterion together. But and then just the final point to sort of wrap it up is, I think that's the best way to look at this. Be realistic, be sort of just
Hmm.
long term. And I don't see, I've been in this market a while now. I don't see the hyper Bitcoinization sort of everybody heading to the exits
Yeah.
scenario, at least not yet, because whether it's the infrastructure is not quite there or just, I just don't generally think that's going to happen because I don't see that that's how the trend line grows for Bitcoin.
Yeah.
So,
And I'm with you there. I've been there for a number of years, and it's not popular, and it gets fudded on. But I think if you don't have real market experience, you don't understand what happens when everyone does head for the exit.
mm,
And correlation of every asset becomes one. You may beat, you may win really well early on with Bitcoin or gold or stocks or whatever, but there's that trigger, and it's about 30 to 50% between the massive, nasty drawdown and every single asset that you were beating everything else with correlates to one. And so I think if we did get that hyper Bitcoinization moment, which means the traditional system failed, dollars failed, gold would actually start to sell because people, it's Weimar, people have to start selling things that they wanted to keep because they have to base on focus on core functions, which are eating, breathing, and sleeping. And
right.
so people start to sell everything. And so I think in a hyper Bitcoinization moment, Bitcoin might do well early on, but eventually it would collapse and fail like everything else. We would go and start throwing rocks and starting fires and, back to kind of archaic times. And then once the dust settled and people got tired of fighting, they would say, hey, let's turn the internet back on somehow. This might be the best way to move forward with money. But
Yeah.
probably would go to zero like everything else because we become wild animals at that point.
Yeah.
And the things that we love about society take second and third place.
And it's certainly not something you'd hope for. Certainly not something
Correct.
that you'd
Not at
want.
all. Yeah, yeah, yeah.
Yeah. And also, I think we have real world examples, and this is also a scary thing, but a possible thing is we have real world examples of how war has changed monetary systems.
Correct.
And uh, it almost in every change over the last couple hundred years was due to some different wars, and
Right.
you can argue whether some wars are cyclical or counter cyclical or not a big deal. Uh, for our Kondratiev wave fans,
Yep.
it,
Yep.
it obviously it doesn't work in its entirety because both World War One and World War Two were huge wars, and one of those is going to be on the counter cyclical of that wave.
Yep.
So there's no easy answer to talk about there, but what we could say is yes, wars could portend some major moves, major changes. Bitcoin could be a part of that, but and though I think that those would be violent and scary times, and trust me, I'm in Eastern Europe here. We're super worried about Ukraine, but uh, as far as like a global shock or everybody going into Bitcoin, I still don't see it because that
Hmm.
has not happened even in the fiat systems or the gold systems. It was either a tweaking of gold, right? It was either
Yep.
like the Dutch moving more into pounds, but it's still a pound based gold, or the British, going off gold during World War One, then going back on it, and then people moved to dollars, but it was still a dollar-based gold. And even when
Mhm.
Nixon went off of it in 71, like the full untethering, the US was fighting big deficits from the Vietnam War. So there was a war
Yeah.
influencing the decision.
Well, and there
Um,
there is now. I mean, it's a cyber war. It's a,
yeah.
war underneath the scenes. It's a monetary war. I mean, my base case coming out of 2007 was the only way to survive was to have a hedge fund manager run the central bank, because every central bank in the world de facto post 2007 became the largest hedge funds in the world, and there was no
Mm,
bigger fish to come and support them. Which, for the 50 prior years, every asset class that grew too fast and blew up, there was a bigger institution that stepped in and bought the toxic assets and let them recuperate, but there's no bigger institution than central bank.
yeah. 100%. 100%.
So
So you want me to just keep pushing on with
yeah,
Bitcoin
yeah,
then?
yeah, yeah. Let's keep going.
So this is the old power curve. We've talked about it a lot. I haven't actually showed it yet to say new time viewers or listeners, but this is how it looks. This is log linear. So again, if you just go back and simply look at gold, straight line on log scale, Bitcoin has this nice concave down uh, feature. And if you zoom in, we got this is as of yesterday's data. Power curve trend is 103,000. Price, or now I think we're like 107,000 maybe as a recording. But anyway, you see, we're just starting to pull it back up, and it's also very interesting. It's moving slower this time. If we just go in these rough four increments, we had sort of two busts, two booms and two busts in 2013. 2017, you could say we even had three, but really just one blow off top. And then 21, we had two tops, which was confusing people. Confused me because I
Well,
was
you had all that
thinking,
leverage. You had all that leverage in it.
yeah, but I was thinking that a double top is not a normal thing. So the second one must have not been the top. But who knows how this one's going to shake out? But it seems like we're going to now in a period we're going to move back above trend.
Hmm.
Uh, so that's it. I want to I can leave it to your questions there, but we can start to put these two things together. Basically, we have the gold, we have the Bitcoin, and then we can look at the fiat money too. Um, but that's what I'm trying to do, basically.
Well, I think so. The one thing you said is starting to slow down. So if we think about Bitcoin as a system, and this will kind of step into those, I don't know if we're there yet, but those daily and yearly, we don't have to go to those yet. But early on, it was moving at $10 a day, then $20 a day. Now we're somewhere around $100 a day. You would think that if you went from 20 to 100, that that would speed up a lot. But instead, it slowed down. And to me, that says as more capital comes in, the stability has to be there, and that causes things to slow down because people are, for whatever reason, less emotional. But it does give some truth to, you can't be money if I don't agree with everything has to be pegged to a dollar. It makes math easier when you go from one asset to the other. But you can't be money if I create a business, I take payment from you, and tomorrow it's worth less or more by 50% or 20% or even
Right.
10%, right? Because there's just no, there is sustainability over a 4 or 5 year period, but when your business revenue is down 80% for 2.5 years, unless you just have a really, selling toilet paper or something like that, it's hard to stay in business.
Totally. And it's been very difficult for we mentioned, Bitcoin businesses. I know that all of these winters, Bitcoin
Hmm.
winners, crypto winners, what do you want to call them, were very difficult for many businesses. And um, if you can sort of hodl through and use some of those savings, it's possible, but it's very difficult otherwise. And miners have shown that actually been a pretty interesting phenomenon is just to hodl some Bitcoin to use during the uh,
Hmm.
down drafts and to reinvest in new chips and stuff. So I have one page with charts on my website so far. It's a redone website actually for many years, but still sort of redoing it. But I have this table. It's the same idea, the power trend, and I show the 10 trend growth rate. So unlike obviously gold, where I can show you a constant 7% for the whole gold network, so to speak. And by the way, it's 20 trillion. We didn't announce it, but it's 19.5 trillion is what I'm estimating roughly is the size of the gold store value market. That includes jewelry, bars, central bank gold, everything. So anyway, we look at Bitcoin, just looking at a price. You can see sorry, here, you can see that the price
Hmm.
is obviously, it's getting heavier. The peaks are lower, and the curve is gonna give a lower rate of return. So if you look on my site here, I do have in this column the trend growth rate. Growth rate used to be 1,000% back in 2011. At the end of last year, it was about 45%.
Hmm.
Projected by the end of this year, going to be 42%. And another very interesting thing, again, just to see how interesting this curve is and why I put a lot of stock in it, is I have this column, which is if prior year-end trend lines held, the projected price today would be. And basically, this says, okay, let's only measure the data of the Bitcoin price movement up to the end of said year. Okay, so 2010 was obviously flying. Let's just go back here. You can see, 2010's pricing data going from rounding to 0 cents, up to 30 cents. That's huge price
Hmm.
movement. So I'm going to go back to the chart here. That would, if we projected the trend out from then, we'd get $5 billion Bitcoin. You're not reading that wrong. 2011 is also crazy, $289 million Bitcoin. 2012 through 2015, not really great. But from 2016, if we just look and measure and take it forward till today, they're all pretty good.
And you could
20,
argue at that point was when the network really became a likely outcome. Anything prior
right?
to that, it wasn't just a handful, but it was really just a handful of people. And it's easy to make noise and price when there's just a handful of people. But that period from about 2015, 2016 was when the stability started to come in.
Yeah. And the SegWit code, which was a big debate in the scaling wars, and
Right.
the Bcash fork was part of that at the end of 2017. That was
Yep.
already even done in like 2016, I think, if not
Right.
even earlier. But so just shows kind of where maybe the network was thinking. But the so this last column, and it's on my website, it updates every day. You can see basically what the trend is projected the price would be today based on all those different years. And you said it pretty close to 100,000. Okay. Like
Hmm.
2018 was a bit high, little hot, a little overestimated at 140,000. But, most years around 103, 105,000, 110, 13,000. So anyway, that's the idea of how it grows. And then one more thing, I also have a table which shows this proportionality, which we talked about. So,
Which is the 12%
right. So you
per
just pick
year
a
time and price.
correct. So unlike, again, an exponential curve, we can show when the power curve actually does double, measure the days. You actually have to do this long form. At least I haven't figured out a way to do it otherwise. So you kind of have to visualize it.
We're
And
breaking trend. Long form is the path forward if you want success, not
right.
TikTok and Instagram.
I'm all for that, man. That is my motto, Kane.
Yeah.
So yeah, so basically, as we were talking about at the beginning of the show, when the Bitcoin network is only 569 days, it's going to only take 64 days to be that 12.7% to double. And
Hmm.
again, all of this is just a iteration, uh, sort of constant reworking the trend line regression numbers to see if this stuff makes sense. But if you go all the way forward till today, you measure these changes. Yeah, it's been at about this 12.7% increase in time, increase in the age of the network to when typically the price will double. So at the moment, we're again, you have to pick a random time here. I'm picking just from the
Yeah.
pizza day in 2010, but we're between this stage right here. So it's March 2024 and February 2026, or otherwise when the Bitcoin network is 5,545 days, a 12.7% increase would be 626 days. And the trend should go from roughly 65,000 at the time to 130,000 in February 2026.
So, right quick, I had put out on my Substack sometime a few months ago. I think we've got this unrealistic obsession with growth. And
Mm,
this shows that, right? If you think about how a hedge fund or in my world, a wealth management firm, you can easily go from 5 million to 10 million. That's 100% growth. 10 to 20, it's hard, but not as hard. But once you get to 50, it's hard to get to 100. Once you get to 100, it's hard to get to 300. Once you get to 300, and it becomes, even though you're growing, that growth rate is slowing very fast. And so if you think about a hedge fund, once they get to several hundred million to $1 billion, it's hard to place trades because the small trades that got them the notoriety, they're too big for. They can't put
mm,
enough capital in without moving the market and messing up the trade. And so then they have to put arbs and they have to do fractions of trades, and maybe they have to take their primary trade, but then a second and third order trade that's not as great, but is a derivative of that first one, just to be able to deploy their capital. So what I'm trying to say is once you get systemically large enough, it almost becomes impaired, or your growth rate becomes naturally impaired. And you also, by doing that, you bring in an alert to other players that see that, and then they start to come in and do the same thing, which makes it even harder to grow because now for the end users, there's more options. On the net, in our flawed way of looking at things, it feels like not a good thing because we always want to grow just exponentially at an unencumbered rate, but it's not sustainable because that's part of what scale talks about. Once you reach a certain point, there is a large amount of energy and resources that have to go into maintenance, which is sort of what you're seeing with the core dev bickering and debate.
sure.
People might say, well, we don't, why don't we really need them? Well, the network wouldn't work if they weren't doing it. But if everybody's obsessed with growth and price and getting to 1 million next week and the intention is there, then the network's not stable. So I don't
Yep.
know. That was a long-winded way around that, but this
No,
chart.
and I think the power curve so far overlays well with that thesis. Growth of a
Hmm.
network, not like the growth of a cell phone or a product or a chip or something, or Moore's law, much more like Metcalfe's law. Talked a lot
Right.
about today on my
Yep.
stream, but um, so here on the power curve, you see it on table form, 1,047,000, 2033. So still a while off, but it's still incredible growth. Like if you translate this into compound growth, having a 40, this curve that you see right here, it's growing $100 a day at the moment.
Hmm.
That represents a 45% growth rate. That's an astronomical return for anybody,
There,
except for
there's
maybe a
no
levered,
other, there's no other asset at this age where, I mean,
right?
unless you are a small business owner and you're in some niche market where you can just kind of grow and grow, or that's basically what Facebook and Google did.
Right.
But it's a hard to sustain that level of growth just
Yeah, you got
out.
to use a lot of leverage. You got to have a lot of people that can help you get there. I'm
Yeah.
sure there is some small business that you don't need much and you can arbitrage somehow, but 45% return is just massive. And
Yeah.
that's what Bitcoin is still doing. So we got plenty of time to go back and to look at this chart. Even if you go out to the year 2035 on my table, you're still at 24.4%. And the
Yeah.
way that the math works out now, you have to go out to 2070 to get to that 10% rate. And I think, again, this is where it gets philosophical. If Bitcoin is the risk-free asset and people are going to want Bitcoins more than anything else, um, at some point, this probably breaks down, right? Like it
Yeah.
might not make any sense. I know I'm doing the math to project these things out and all the stuff to 2035 or 2070, but I think for sure in the next 20 years, based on the other stuff that we see, we'll have a like emerging, like a Bitcoin standard, something where
Yeah.
just the entire system is going to start to look different.
Yeah, it will. I mean, look at the internet. So from the 60s, it was just, universities, some government entities passing information that spread out to message boards. And Andreas Antonopoulos talks about a lot of there was this fear that the internet was going to collapse because they couldn't send in information fast enough, and they put this thing called email, and that was just going to totally destroy it because it was a 2 day time, and now there's just so much information it couldn't support it. And then we got video, and he kind of so the internet today looks drastically different than what it did in 80 and 90, and Bitcoin in 2040, assuming it's still here, will look drastically different than in 2025.
Right. Right.
One other thing on there, you talked about the changing the way you looked at the daily calculations, or the time frame, because the declining peaks over time altered it such that using the life, you typically use the life of the data set in
Yeah.
power curve, but you kind of shifted to more of a nearer time frame because you noticed that there was an alteration in
Yep.
those metrics.
Yeah. So I appreciate you reading through the site and finding some of those things. But the most beautiful way to draw the power curve will be this way. This is Plan C and Cena. If you've seen these
Yeah.
accounts on Twitter,
Yep.
uh, you could do that.
I
What's
had
called
a
the quant.
Cena on a couple of weeks ago.
Oh, okay, great, great. I'll check it out. So the quantile model, he put that together with Plan C, and there you get each bar of the rainbow has a different coefficient. So it's
Hmm.
it's it's kind of like it's adapting to itself, and it's trying to get those curves nicely fitting. But you have to have the template in front of you. It probably is the best way to look at it, frankly. It's a nice rainbow chart there, and you can look at predictions of where it will go. I don't have that drawn yet. Uh, It's
Slacker.
it's partly well, it's partly for functionality because actually doing the quantile and finding different regressions because I'm doing all these manually. So
Yeah, yeah.
whatever. This is in the weeds stuff, but in order able to draw the cursor over it, I need to actually calculate it out. Like I guess I could get some stats program, run it, and copy the numbers in, but I rather do it manually in Excel. Like I have formulas and stuff and scripts, but whatever.
Yeah.
Point is, uh, another reason why I keep my model is I like thinking of things not in terms of percentiles, but in terms of multiples.
Yeah.
So if we know the curve is 100 grand today, we know the curve might be 130 grand by the end of the year or 120 grand. Where is a multiple that could take us up or down?
Hmm.
And
Well,
without
I
getting
think that to throw in there that if you create this fundamental valuation metric, traditional finance, which is coming and is clear, they're coming in Bitcoin, they think in terms of multiples.
right, right. So it's just an easy way, but basically the old way, and this is we are getting in the weeds, but I appreciate you looking at it. This is my old way. I was actually showing this for years on various things, but I'm just no matter the time, however it grows, you have this regression and say, way back here in 2011, where was the trend line? And then where is the multiple that will give us, the best fitting, like
Hmm.
97th percent, 97.5 percentile is roughly like 2 sigma or 2.5 percentile on the downside. So it turns out to be about 6.2x here. But the thing is, that's 6.2x, which again, just to show you precisely, like when the price was $35, June 2011, the trend line itself was only $2. So to draw like these bands, so we can sort of understand tops and bottoms, you do the percentiles, you look at the multiple. So it turns out that the multiple would be 6.2x or $10 on $2 at a time. The problem with that analysis was the power trend didn't look like that at the time. As we
Right.
talked about, it was way steeper. So
Yep.
I sort of was trying to think about how to save the multiples, but keep the trend. And so I did this. I don't show this all the time, but I actually had this evolving trend line if you can see it. This is really into the weeds. I appreciate
Oh,
anybody
yeah, yeah.
staying
Yeah.
on to this. But so the trend line itself, let's just use as the same example. Back in 20, this was right when the first empty GOX occurred, right
Hmm.
there. Why can't I catch the $35 there? So the trend line at the time was actually $4. But since we look at all the data before I was, the trend line becomes $2 as sort of the time expands, we get more data, the trend settles down. But at the time, it was 4. So it's actually better as far as finding tops and finding multiples is use this, right?
Yeah.
So then we can draw this,
Well,
but you have to evolve it. It's not smooth if you want to make sense of it.
but you
So a
can make the FOMO and emotional to both the up and downside doing this because you can say, well, hey, we're so far away from trend, it just doesn't make logical sense.
Yeah, the old way that I had was still mathematically correct. It's just kind of a different way
Yeah.
of thinking about it. And like you said, I wasn't catching the peaks from the
Hmm.
last run, so I wanted to catch them better. Still thinking in terms of multiples, so that's where I did this. And so it, it's not as beautiful, like I'm following the evolving trend. But then again, you can sort of see things that we've already talked about. So from 2016, even though I'm sort of almost looks like a trading view chart, whatever, I'm just sort of like it kind of seems like a moving average. It kind of is, but it's more, it's correlations and trend lines and stuff. So you can see from 2016, it looks pretty good to when you start projecting out.
Yeah.
So it's just a lot of data to say a lot of different things. But the point is, you see it at least better here. So the multiple is lower. And bottom line is that 97.5 percentile now, as I calculate it, which is going to be a fixed multiple, is 3.5x. So now, so that catches the 2011 trend better, catches the 2013, and like I said,
Hmm.
2017 is fine, but 2021 still didn't catch, but it looks better. Point
So I did.
is,
Oh, go ahead.
well, yeah, just point is, if we want to do the old what trend lines are for 4, project out, assume the 4-year cycle, end of 2025, something like a 3.5x multiple would only be 400,000.
Right.
And I think that's a top price.
That's
Whereas
super high aggressive.
if you use my old though calculation, this shows you the sensitivity,
Yeah.
700,000, nearly 800,000. So it gives you this stuff is wild depending on how you tear into the numbers, and you gotta be careful with it. But this is
Well,
my
I
more
think that
conservative
it's
view.
it's because the power curve is the truer form. And notice I said curve there, so I'm using your terminology. I like that.
I like it. Yep.
Um, is truer to form the reality of hey, the way systems work and evolve. But there is, and Giovanni goes into this, and Stephen, I think Paranon,
Yep.
um,
Both
there
great
are, yeah,
analysis.
they're phenomenal too. Stephen, I'll have on later this week, but
Nice.
uh, exponential periods, and I won't have to beat a dead horse, but we saw that early on. You see that into blow off tops. I don't know how you do exponential in the negative, but you see it in. I'm a technician by trade, so you see it in the wedging of the downflow where once the last seller has sold, there's nobody left to sell.
Mm,
And so at the top, once the last buyer has bought, there's nobody left to buy, so it just collapses. But so you see those exponentials show up at different times, but the base of the system is power curve. Talking
right.
about these declining multiples, what I noticed, I guess it was a year or two ago, and I talking about long form and painful. I didn't even know what I was doing, but visually I noticed the declining nature of it. People weren't talking about it. Um, I got in touch with what is it, Sminton West?
Sminston with, yeah.
Yeah, Sminston with, yeah. And we had a couple of calls to talk about it, but I manually took line from so if you go 13 to 17, peak to peak,
Mm,
and then from 17 to 21, and then or yeah, and calculated the angle between those lines.
mm,
So, and it arrived at a similar nature of where your power law. It was more in kind of the 180 to 250, which also just looking at, traditional technical things, there's these low probability, Pareto's principle, the lower probability that you blow out, but the more highly likely probabilities were under that based on just actual geometric angles. So I calculated and figured out, well, what angle was this? What angle was that? And it declined over time, and they all kind of came together. Um, it was a
yeah. No, that's
painful way of doing it, but
and essentially, yeah, I mean, you're getting some sort like the tangent of the power curve or something if you're connecting them. And so like I think even this looks rich. We can like I have another one. We can end this whenever you want. I know we're over
Yeah.
time, but like this one is the uh top 10 percentile
Hmm.
bands starting at the 90th. So I
Okay.
already think like I should. So this is my evolving, right? My evolving
Right.
multiples. The only time you hit 7.8x is here. I don't think it's going to happen again over the
No.
trend at the time.
Mm-mm.
Take off these and it starts to be like yellow, hard to see, but basically even here, no, this one I'll keep. So if you pull it out then and you see these
Yeah.
spikes are just days above 90, but uh, we hit it here and I think we'll hit it here. A lot of people think we might just have a smooth run. I don't think so. Pendulum swing. I think it'll be hard again. It might be late. Might be like people are saying it might be into January through April 2026, but uh,
My estimation is July to October if Wall Street front runs it.
this
Um,
year,
yeah.
this year, yeah,
Yeah.
that's totally possible. Totally possible.
And that was just
And
coming from 2023, just looking at blocks.
totally possible. And so bottom line, brass tacks for probably my headline analysis is I think 2 to 2.5x on the trend line, which has never changed no matter what my
Hmm.
research has done. I mean, I'm always using the base trend line. So that's 250K to, 300, 320K, something like that.
Yeah. And not financial advice. This is
Never
just
financial
just
advice.
just math.
We're having fun here.
Yeah. This is just nerd talk, so avoid it if you don't like it.
Just to pull the sort of the final thought, because we talked about gold, talked about Bitcoin running the power curve, and then so this is the other piece of the research that I was doing in 2017. Sorry, 2018 is when I first published it. And so this is the top 5 currencies in the world, plus the remaining 45 is here, remaining 45 currencies. And as I call it, world basic money or monetary base, um, this is the money supply that compares to Bitcoin. So it's
And
fine
that
to
is
do
what Bitcoin eventually eats into.
correct. I think it's fine to talk about, how Bitcoin relates to US M2 or better M3, which I also have a calculation of. Fed doesn't publish M3 anymore, or Euro M2, whatever. You can look at all these supplies, but those are extensions, derivatives of uh, the money itself.
Hmm.
And if you want to talk about the money itself, which is central bank prints, it is here. This is the literal printing press. So no, you see during the old pandemic days, we were up to $30 trillion. You have to calculate all these and then turn them into dollars. Of course, there's some slippage there. Now we're at 26. We got as
Hmm.
low as 25. It was actually in December,
We chewed
25.5.
down we chewed that down pretty quickly.
We did. And that is basically you saw, the Silicon Valley bank crisis,
Hmm.
rising interest rates, people moving out of stocks. This is why I don't necessarily believe in the chaos theory or Bitcoin hyper Bitcoinization. I mean,
Right.
like you said, we chewed out of it. Like, yeah, it was explosive, probably a lot of grift, corruption, whatever. People got this extra central bank liquidity, but now that basically 4 trillion of that is gone.
Well, my
Uh,
thing is, and it's sort of that's where capital flows is important. That and one of the reasons why I wanted to talk about this to understand that when liquidity goes out, that has to go somewhere. So that's goods and services, investments. When too much liquidity goes into investments that will store that purchasing power, but it's not a never ending. It's not straight up. That liquidity eventually comes out because people said, "Hey, I made a lot of money on my Bitcoin or gold or stocks, and I want a car, or maybe I do want a chair and a bed in my room if I'm a Bitcoiner." And so the only way to get those things is to sell the asset for a spendable asset, which is one of these currencies, depending upon where you live, what region uses that. Um, and so that sends money back the other way, right? Because it
yep.
goes to pay off some debt, some credit, some something. And so I think it's unrealistic to think, and I personally don't. I think the world does not need another currency, so I think the currency function of Bitcoin is nice. It gives optionality, but if Bitcoin becomes a currency, it's going to go the path of every other man-made currency, which is zero.
Mm, that's an interesting thought.
Like
That's an interesting thought.
the network is the value because what is broken in the world is no savings mechanism, meaning
Yeah,
no monetary utility asset that other than gold that saves purchasing power over time. Bitcoin does that phenomenally well. The value of TCP/IP is distribution of information that people can make productive economic decisions off of. It does that really well. But being a meme generator doesn't necessarily create money. For some people it does, for most people it doesn't. So
yeah,
being another currency asset in a system full of too many currencies is not very important.
precisely. And when we think currency, it means government money, right? Government
Right.
controlled, central bank controlled. So that is what this is. And, they can destroy it. People talk about how all they know how to do is print. It's true. It is their typical solution, but they've just destroyed 4 trillion
Hmm.
in currency in the last 5 years. Even the Federal Reserve, from when Bitcoin was screaming to that 20,000 high in 2017, the Federal Reserve was declining its balance sheet. It was not printing. It was not
Right.
lined up. The
Right.
last cycle was lined up. This cycle might not be lined up. This is another reason why. Another important point is I think the power trend is it's a concept on its own at the moment, which you can mostly overlay the idea of adoption. I think it's
Yeah.
adoption that we're seeing much
Correct.
more than even the liquidity or money supply or anything. All this stuff is a part of the picture, but the trend is your friend basically.
And
Uh,
not to go too long, but that's where
yeah,
SDRs really comes into this picture is because
yeah,
it was floated as a digital currency. It never worked. I wrote a number of articles on this. It never worked because we didn't have the technology to make it work, meaning
yep,
communication wasn't fast enough. So Bitcoin actually does exactly what SDRs had intended to do. And the major problem for banks and central banks around the world is they print this currency, but they do it in the form of reserves at banks. A reserve is not usable. And then
yep,
if you take a large percentage of those reserves and you say you have to maintain those as a reserve for your tier three Basel capital ratios, it's even more not used. So you printed liquidity and then you trapped it in an unusable feature. And so if Bitcoin could be that uber liquid utility tool that gives optionality to opt out of a system, which gives you some currency components, but doesn't become the major focus, then it effectively could unlock reserves if they change the regulations around the way the system works. And I think that's what you're seeing from the US right now with the stablecoin bill and some of the other bills around Bitcoin as a strategic asset. My hope is they don't just funny money it like the rest of these things over the last 50 years.
yeah. And that remains to be seen. But 30 seconds on the accounting because you honed into it. Like on the central bank balance sheet, if you just think about assets, liabilities, assets have to equal liabilities, basic accounting. This money that you see on this screen is a liability. It's the
Correct.
basically the liability side of their balance sheet. So that's where the money sits. That's what they create ex nihilo. On the asset side, they traditionally hold bonds, but Swiss central bank holds stock. The Japanese central bank, the BOJ, holds stock.
They hold
Fed,
everything.
yeah, Federal Reserve indirectly holds real estate through these mortgage-backed securities, but mostly government bonds. So that keeps the government going. That's a big part of the whole scheme.
Hmm.
But then there's also gold. There's gold and there's SDRs. SDRs are meaningless for big banks, but for smaller central banks, they are a decent size of their assets. But like you
Yep.
said, you can't use that as a currency. It's just a
It's not
reserve
usable.
asset. The thing is, Bitcoin is an asset on that side, but it's usable. So it's a
Right.
sort of like you said, the optionality. I like that phrase. It just opens up a lot of doors of what could happen. You could use it as a strategic reserve, or you could use it as, you know,
You can sell it
part of
down
your
like anything else.
exactly, exactly.
So, so if you think about money, land was the original money. The time to sell it took way too
Mm,
long.
mm,
Gold was the secondary money that was faster than land. In reality, it took way too long until we securitized it. So we securitized land, we securitized gold. Bitcoin is the fastest, within an hour, effectively. I mean, every 10 minutes a new block, but really, if you spend Bitcoin, it takes about an hour to get six confirmations. So,
Right.
but it is money good the second that you spend it because you get dollar, euro, pound, yen, whatever you're trading in, Swiss francs, to go use at the store. So you could purchase something with a credit card, sell the Bitcoin, dollars hit your bank, transfer to pay off your credit card in a pretty instantaneous manner relative to what you could do if you're trying to sell your gold and then you're taking a haircut. If you're trying to sell your land and that would happen in 6 months. Um, so
Or
it,
sell
it
your stock. And that's an equity that's on the other side of the balance sheet. It's a little bit confusing, but still.
yeah.
Yeah.
So yeah, I
Yeah.
totally agree with all that. And hopefully in the securitization process, we don't break it, but that's effectively, in my opinion, what's going on.
Yeah. So anyway, we can leave it there. It's just that if you put those all things together, I do have this. We didn't get to that chart, but this is kind of I've been pushing this a lot on my daily stream, but this is really, I think, the big picture. You can actually add these up. So normally you wouldn't do that for accounting, but I think in this case it makes sense because it's the base. So in the
Hmm.
central bank money, that 26 trillion I said, that's the liability. Then you have
Hmm.
gold and silver and Bitcoin, which are assets. So forget the Bitcoin. We want to compare Bitcoin to these things. So take the
Yep.
available gold, available silver. That's right, roughly 21 trillion. You got the 26 trillion in fiat. You can add that, just remove the gold and now the Bitcoin. There's about 500 billion in Bitcoin in central banks at the moment. You can check that on bitcointreasuries.net. Our friend Rodolfo from CoinKite has a good chart there, bitcointreasuries.net. But so anyway, remove the overlay, remove the backing of one. So it's basically available gold and silver plus the unbacked monetary base, which is not backed by the gold and silver that's in. There's no silver in central banks, but there is about a few trillion now in gold. It's a pretty big number. But anyway, so you sort of take those total, and that is core of the system, like money, past and present,
Yep.
and that is this number. And this number grows at about 8% per year. So think about a blended. I told you, actually, I don't know if I told you the fiat. It's actually closer to 10% in dollar terms. The gold I showed you was
Seven.
7%. This gets to about eight, something like
Hmm.
eight, a little less than eight. So there's the total right now, 43.34 trillion. Exponential curve. This is obviously a straight line on log scale, grows exponentially. Let's just say 8% per year. This is my sort of thinking of this. And then let's just layer in the Bitcoin market cap. These are monthly scales, and I project the Bitcoin market cap by price times the amount of coins that we know are going to be, because it's another unique thing about Bitcoin, the predictability. So there's that. And then let's just see when they cross mathematically. I mentioned this data already. It's about 2043. So like this is sort of my Bitcoin dominance. Right now we're at about 5%, 4.8%. And these are brand new numbers. Actually, I just finished them over the weekend. So whatever, they change always a
Nice
little bit.
work.
Yeah, but you know, extend it out. When does this
And
get to
that's the Jesse
100%?
Myers chart that Saylor kind of used to front run the adoption in traditional tools. So if Bitcoin, because of legislation, if we wait on U.S. legislators to make Bitcoin something that's usable by banks, it would take another 10 years. And he's like, well, I'll just do it in traditional tools. I wrote a paper on that a couple weeks ago. You get to that 155 trillion faster or in a reasonable time, which is kind of the numbers you use here, than you would if you wait on authorities to kind of set the framework. They'll do it
Yep.
along the way, but they will be pushed to do it faster to meet something like this time frame.
And then back to our philosophical discussion. Like, obviously, I'm not saying, by the way, when it gets to 100%, this is Bitcoin versus the rest of the money. So it doesn't mean it's
Yep.
actually 50-50. It's 50-50 at this point. But
Yep.
obviously, I have no idea. No one knows the future. It's just 18 years out. I suspect somewhere after this, maybe two more halvings, maybe 8 years, something, when we're getting to like 50% of the total value of all this stuff,
Yeah.
I think things are going to start to maybe You might have some Bitcoin bonds. People might
What?
think differently about pricing bonds. You might get to a Bitcoin standard.
Yeah, what's interesting about that, if you look in the back of Scale, there's a chart on the reason why I keep bringing up finite time singularity, because that's the thing that we're always trying to solve for. Uh, there's the thing that goes up exponential dies because it just can't get enough resources
Explodes.
to grow.
Right.
And the maintenance starts to take over, so it kills it. But there's two charts at the top of the left hand page, and the other one is kind of like a half of a, it looks like a rainbow, half a rainbow, and the time on that chart, I don't know if it's true, what it was, 40 years. So if you think about Bitcoin, if we didn't innovate, if we didn't, if things don't happen to the network to scale with monetary use cases, you're showing that. I mean, 2043, so minus
What
eight.
was he
That's
measuring? Do you remember?
well, it's just how finite time singularity works. So
Hmm.
any system that grows, you have the super scaling, which is exponential, and that kills the system, and then you have the sub scaling, which is like how cities grow with utilities and powers going in. And once you lay that foundation, you can build a lot on top of it. Every once in a while, you have to come and adjust it. But if you don't grow sublinearly, you die fast because the super scaling, which is the traditional financial system, is an exponential system, and why asset classes die off so quick. So if you say 2043 minus 2009, you're basically at 34, 35 years, which is depicted in that picture, and you weren't really even, I mean,
That's
you
interesting.
you've
I'll
read
go
the
back to
book,
the
but
book.
you
I'll go
you
back to
weren't.
the book and look at that
It's in the back two-thirds
appendix.
in the upper left hand part, and it's two charts side by side.
It's not the very end, but it's in the book.
No, it's in the book. I think
I'll check it.
it's
Oh,
either the last chapter or the appendix chapter. Um,
nice.
but yeah,
Yeah, I actually didn't make that connection, but I think this is the big picture, honestly.
yeah,
I'm happy for Bitcoin, hyper Bitcoinization, but like you said, I think there's more things to worry about there.
yeah.
Same thing with quantum. I think that's kind of everybody likes to talk about it, but I don't know
New
where we
stuff
are with
takes
that.
15 years to bake. I mean,
Yeah.
look, Bitcoin was new, it changed the world. It took 16 years. Facebook was new, it changed the world. It took 15 years.
Yep.
If you run a business, the first 10 years are where you make the business, and then the last 5 or 10 is where you get paid. It takes 10 or 15 years to build a core piece. I mean, one last thing, and then we'll go. We don't even have to riff on it, but we were talking about growth rates. So if you look at, I did a couple of posts in 22 or 21, 23, something like that, talking about money growth. Everybody's like, hey, we printed 40% of all money in the last couple of years,
Mm,
US dollars, talking about M2.
right.
But we actually printed a lot more of that across global currencies. And, my just kind of basic non math degree said if you took that rate times the rate at which we printed SDRs. So SDRs, they blew out by 60%. And as a tool, nobody talks about it. So if you printed a dollar fiat, which is, since the dollar is just a basket of others, so you the centerpiece of the basket, you blew out by 40%. But then SDRs are traded between central banks, and you blew that out by 60%. So in some capacity, you did it in pound, yen, yuan, euro, the core. I think there's 16 or 7 in the SDR.
Sure.
Would it not be zero point 0.4 times zero point 0.6? And that was the true supply of money that we blew out.
Interesting. I'll have to look at that. I
Yeah.
haven't focused much on SDRs only because
It's non
that's,
usable.
yeah, it's not usable and it's inside of this money
Right. So
total.
there's the distortions. Did you blow out dollars or did you blow out yuan? Did you? But I
It's
think
true.
that, yeah.
You could look at it. Yeah. It's part of the asset structure of central banks and it gives an inflated value of their reserves.
Yeah,
You're
it's the
absolutely
true
right.
monopoly money.
Yep. It is the
Because
true
only
monopoly money.
it's only used in the board game with which central banks play.
Yep.
So,
100%. And gold is like, I mean, that's obviously you go to GATA for the
yeah,
conspiracy
yeah,
theories there. I
right.
mean, I don't know how you feel about that one, but it's interesting. It's interesting.
I feel like I looked at it and I knew where I would end up going, so I just only look at it occasionally. I know what it is. Let's put it that way.
Yeah. They got actually very interesting historical documents
They do.
on that
They do.
website. I haven't looked deep enough to really, believe that the gold in Fort Knox is not all there or whatever, but that is the
Here,
conspiracy they're working with.
here's my base. Conspiracies are truth. We find out 100 years later. You look at the House of Morgan, everything that happened, central bank, it was all conspiracy at the time.
Mm,
It's true now. Um, to find the truth, you have to go to the source, which is the document, the word, the whole 9 yards. Um, I think that, and I kind of beat the drum, the reason why this cycle is different, obviously the power law plays into that with volatility declining over time, but we have a full set of Wall Street tools. I've run the volatility metrics from the date before and after those tools were put into play. Volatility declines every time. So I think the one potential downside to power laws potentially breaking is that the suppression tactics that Wall Street banks use through these derivatives to suppress gold over the last 50 years, and
mm,
that's not a conspiracy. It is a conspiracy, but why did JP Morgan pay DOJ a $900 million fine and people go to jail over it if it was not conspiracy? So I think the risk is if Bitcoin is an SDR, then that same thing will play out because that's the history of banking over thousands of years is doing that same thing, which is creating arbs to compress down price so it's more
yeah.
usable. But
But
anyways,
no, but I think as long as you can withdraw it, that's the key.
right. That's the
They may make
optionality.
they may make it. We'll see. They're going to try to make withdrawing illegal at some point. Someone's going to try to do it. People are going to have to react. This is not over. You
Yeah.
know,
Yeah.
uh, People think that this is like a massive tailwind that Trump is doing in the U.S. and it is. But I can just as easily see. I'm not saying this is going to happen, but I could just as easily see. Just like the SBF style
Yeah.
FTX. They were obviously trying to get their own market making with having literally zero Bitcoin on the books.
Yeah.
Uh, Total fraud. I'm not saying that that's what's happening with the admins connected World Liberty Financial, but we can easily see the tide come out and things change there. So that's just one little piece of it. But I, I just I don't see. I think this is just it's a game, right? I mean, like it's going
Yeah.
to continue. Like there's no I think there's no start date, no end date. I
Yeah.
guess
Money is a
theoretically,
game. We create it
yeah,
and we
yeah.
break it.
Yeah. Theoretically, there's going to be one time when we get onto the Bitcoin standard. But as long as you can withdraw the Bitcoin and it's legal to withdraw it, that is very different than like anything we've had with gold. I mean, in
Yeah.
principle, it's the same thing we have for gold, but
Mhm.
it's so much easier, so much faster. Like you said, you could do it in an hour with finality. Uh, you could send it to your friend in Turkey. Like it's way easier than transferring your stock portfolio or your gold portfolio. As much as the
Mhm.
gold money people really have worked hard to do that, uh, but you got to pay for that stuff. And with Bitcoin, it's very
Yeah.
very cheap, very very
Yeah.
cheap.
Yeah.
So that's going to be interesting to see how that plays out. I totally
Well,
agree.
well, for any other long form friends, since we're an hour and 40 minutes or an hour and 30 minutes in, the truth is there's two systems in the world. There's a monetary system, which is based off money, has a different set of principles, has a different set of realities and choices you have to make. And then there is the truth based on the word, which tells us that money is not the end all be all. Purpose, work, doing meaningful things are the truth and what really kind of give us life. And
Mm.
so there's always that conflict between truth and money. And you just we all have to operate within the system of money because that makes the world go around. But if we want true purpose and success and happiness, it's not in the money realm. So
I like
that's
that. I like that, Kane. I couldn't have said it better myself.
all right. Well, Matthew, I appreciate it. You give some parting shots where people can find you or your work. I recommend everybody go look at it. It's not. I think you do a good job of breaking it down, not making it too complex. But
Thanks. Yeah. I mean, my handle in most places, everywhere, even on YouTube, is one base money. So the number one base money. You can find me there anywhere. The website is, you can find it at basemoney.world if you can remember that, or porkopolis.io. or cryptovoices.com. That's a podcast we do as well. So although we're like the last Bitcoiners doing a name crypto in the show, but yeah,
Keep it
that's what
real.
it's called.
That makes you an
I did.
OG.
I have kept it.
All right, man. Well, thanks. Maybe we can do another one. We can jump into some other stuff at some point.
Yeah, I'd be happy to. It's really interesting to hear your views, and I agree with pretty much all of it. So good stuff.
No.